Hello, Wealth Masters. My name is Greg Phelps, and I am your host to the Summit. Our mission at the Summit is simple. We want to educate and empower you with actionable tools, tips, and tactics to help you grow, protect, and maximize your own personal wealth. Today, I have a special guest on, Mrky. Mark, are you ready to help us master our wealth?
I'm ready to help you master the world of life settlements. Absolutely.
All right. So for the wealth masters out there, a little bit about Mark. Mark is a managing member of Life Insurance Settlements, Inc. They're the nation's most experienced life settlement brokerage, and their sole focus is helping people get the most money possible from the sale of their life insurance policy on the secondary marketplace. Mark began his career with LIS in 2001. His specialty is educating and working with senior clients, estate planners, insurance advisors, attorneys, and other financial professionals about the benefits of the life settlement industry. He's presented to groups such as the NAIFA, Top of the Table, INSMARC, Society for Financial Service Professionals, National Association of Philanthropic Planners, local estate planning councils, various broker-dealers, insurance carriers, and professional groups on the subject of life settlements. That's a whole lot of places that Mark has been speaking. Mark has a BA in psychology from the University of Nebraska and is a member of the Life Insurance Settlement Association. He met his wife Deborah while working in Australia, and they have two sons, Jack and Sam. Mark, so that's a little bit of your background, but take a second, fill in any blanks that I may have missed.
I think you've got it covered. First of all, I'll say I appreciate the opportunity to talk about a subject that, in my opinion, is really one of the single most overlooked topics that financial advisors, estate planners, and even clients direct often aren't aware of. So I always appreciate the opportunity to come in and tell people about this industry. And for those folks that are sitting there deciding if their life insurance policy still suits their needs, this is an option that every single senior at least needs to be made aware of. So I do appreciate the introduction there. Like Greg said, I've been in the industry for 17 years now. My partners, they've been in the industry for 24 years. May not seem like a long time, but actually that makes us really one of the oldest entities in the life settlement market. Our market is very young. We're under 30 years old. And like I said, people are still learning about it. So this is a great opportunity, and I appreciate it once again, Greg.
Okay. Well, Mark, we're going to just roll up our sleeves and dig right in. And the first part of the talk that I want to focus on is just to explain to the viewers out there what exactly is a life settlement.
Absolutely. What is a life settlement? It's one of those, again, misunderstood topics. So here is the true definition. A life settlement is when a senior, someone's over the age of 65, is selling a life insurance policy that they no longer want, need, or can afford, and they're changing that ownership to a third party. And that third party is normally a financial institution. So that is the true definition of a life settlement. You're selling your life insurance contract, this asset that you own, to a third party.
Okay, and I kind of want to drill down on that. So a life insurance policy that somebody owns, one of my clients or any other seniors out there, it is actually an asset that is sellable, which I think most people don't understand that. It's sellable, right?
Absolutely. In 1911, Congress said that your life insurance contract is actually an asset, and that asset you can take and change the ownership to a third party, which is exactly what you're doing. It's all you're doing in a life settlement contract. You're taking that ownership, currently owned by a trust, a beneficiary, a son, a daughter, whoever it is, and you're changing that ownership to a third party. So again, that's Congress made that act in 1911. They treat life insurance as an asset, which most people aren't aware. They don't know that this contract that they have, that they've been paying on year in and year out, has present value today. And that's where we come in as a life settlement broker. Our job is to make sure people understand that there is current value to your policy. And that value sometimes might be as high as 7 times the current cash surrender. And we'll get more into that. But yes, that's a little bit on the basics of a life settlement there.
Okay. So your life insurance policies are a sellable asset, and it sounds, I've dealt with this in the past with other clients. I've had clients call me and they say, hey, I've got this thing, somebody sold me a Viatical, and what the heck is a Viatical? What you're talking about with a life settlement sounds an awful lot like a Viatical.
Sure. That's where the confusion comes in. In my industry, number one, you have two sides of the equation. When someone says they sold you a Viatical, they may have gotten into the investment side where they invested in the purchase of someone else's policy. Now, there was an industry way back when in the 80s and 90s, and it was called the Viatical Settlement industry. Now, by definition, A viatical settlement is simply when an insured sells their insurance policy and they've been given a life expectancy of under 24 months. Now, our industry still exists as life settlements now. We've transitioned from a viatical, which again simply just means your life expectancy is under 24 months. And again, that industry really started in the 80s and 90s when AIDS clientele were taking their policies. They needed money for medical needs, things like that, and they were selling those policies to third-party investment institutions, and those were termed viatical settlements. And then in about the mid-90s, some smart bankers said, well, wait a second, we can do this for folks that have very short life expectancies, viaticals. Why can't we do it for folks that are 65, 70 and older that have longer life expectancies, as long as 20 years? Well, that happened, and now we've coined the term life settlements.
So really the only difference is a viatical is technically when the person you're purchasing the insurance policy from has a life expectancy of under 2 years, whereas a life settlement is something longer than 2 years.
Correct. In our industry, 2 years under viatical, between 2 years and really what funders about 20 is the cutoff, will be termed a life settlement.
Okay, so that's interesting, and we'll dig a little bit more into that, but you mentioned that 20-year cutoff, so we'll kind of tackle that here in a second, because I'm very curious who's a good candidate for this. But, you know, Mark, we talked about your life insurance policy is an asset, but what types of life insurance policies actually qualify for a life settlement?
Easy answer here. Any and all types of life insurance. Now, the number one type of policy that most of my buyers in this industry are looking for are universal life policies. Typically, it's a universal life policy that hasn't performed to expectations, the cash values are low, maybe the premiums are becoming a burden and the client decides to sell. Universal life is number one. Now, a second, and this one without a doubt is the most overlooked, is a term policy. Most people think, well, a term policy has no value. You know, once you come to that end of your conversion period and you're going to take premiums that are small and all of a sudden they're going to quadruple, you decide, well, I'm going to let that policy go. Obviously, a term policy has no value. Now, we tell people to hold on 1 second. If your policy is still convertible and you're at the age of 68, 69, 70, 71, 72, which is that age right before it has to be converted, and you've decided, nope, I'm not going to convert it, premium's too expensive, a life settlement can be a perfect fit for you, because obviously if you surrender back to the insurance carrier, you're not getting anything back. It's not like a universal life or a whole life that might have some cash value. Term policies are great options in the life settlement market. The key to a term policy, I will kind of give you a caveat. You need to have some change in health. You don't have to be dying by any means, but some change in health since that policy was originally issued, and that term policy might have value in our market. So you've got UL, you've got term, you've got survivorship, key man policies, whole life policies, group policies. Really any and all types of insurance can be looked at in my market.
Wow. And so I want to circle back real quick for the viewers out there. You mentioned convertible. Can you elaborate? What is convertible?
Yeah, absolutely. Good question. Your term policy, you usually buy it as a 10, a 15, a 20-year period. And at that last year, you'll get notice of convertibility from the carrier saying your policy is about to expire. It's 10, 15, or 20-year term. It can be converted to a permanent product, which is usually universal life or whole life. And if you'd like to do that, here's a new premium stream. Premiums, going forward, which typically are quite expensive. So you'll want to contact your carrier. Really, again, it'll be that last year you'll get notice that, hey, the policy is only convertible for another 12 months, 6 months, 3 months, whatever the period is. And if you decided that there's no way you're going to convert that policy and pay much higher premiums, our market could be a great fit for you.
You might as well get a quote and see if it's worth anything, right?
Absolutely. And speaking of quotes, our quotes cost zero. And we'll get a little bit more into that, some of the qualifiers, but to get a quote in my market does not cost the client anything.
Okay. So every type of life insurance, well, for the most part, every type of life insurance policy is potentially sellable. Is that fair and accurate?
Absolutely, fair and accurate. Potentially sellable.
But probably not every person is a good candidate. So let's talk a little bit, Mark, about who's a good candidate for a life settlement.
Sure. Whether your reason is health, personal, financial, and if you're over the age of 65, you're a potential client for the life settlement market. Now, our buyers do look for a few things. They're looking for folks that are either older or have had some health change, because my buyers are looking at two important factors. That's number one, the cost of the insurance going forward, because they're buying that contract from the insurer. They want to look at future premiums. And then they're also looking at life expectancy. And most of the buyers in the life settlement market have a threshold of around 20 years. So that's why I tell folks, if you're on the older age, 75 and up, you're definitely a good fit. If you're under the age of 75, let's say between 65, which is our age limit, and 75, it's helpful to have some deterioration in health. Again, you don't have to be dying, afflicted with cancer, or anything like that, but some deterioration in health since your policy was originally issued. Those two things are very important. And then it just comes down to circumstances. You know, the very reason people buy insurance come back to the very reason they might want to sell insurance. And what I mean by that is we all buy insurance. I own insurance on my sons. They may grow up one day. They may become whatever they become, famous, successful. That death benefit may no longer be a need for them. Well, that's a change in circumstances to why I may no longer need that policy. So it's a good reason for any client to look into our market. I would say the top 3 or 4 reasons clients will look into this market. Number one is an underperforming universal life policy, without a doubt. We see a lot of policies that the client has taken out, they've held on to for 2 or 5 or 10 or 20 years, and they're looking at their statement and they thought their return would be much higher. Maybe they thought their returns on that universal life would be 8%, 10%, whatever it is, and they're gaining 3 or 4 or 5%. Premiums are becoming a burden. They've decided, well, what's my option? A lot of times we're that option. In fact, we did a study by the Government Accountability Office, GAO, did a study on life settlements. They said, in general, clients receive 7 times their cash surrender value. Think about that. You got a universal life policy. You're thinking about surrendering for, pick a number, $20,000. My industry comes along, does a free appraisal of that policy, and more often than not, we can get you 2 or 3 or 4, as high as 7 times that present cash surrender value. So, go ahead.
It's a tremendous amount of money that people are leaving on the table because they look at their statement and they think, okay, well, here's what I've got. I've got $20,000 and I just don't need this policy anymore. And they don't even think about putting it out there as a sellable asset. So they're just missing the boat on $120,000 potentially.
Absolutely. People have to understand that life insurance is an asset. It's an asset that has current value, much like your home, your stocks, your bonds, your jewelry, whatever you own. If you decide to sell that asset, what's the first step you always take? You go and get an appraisal. Let's see what my home's worth. Let's see what my gold's worth. Let's see what my stocks are worth. Same thing now exists for life insurance. You can now go get an appraisal on that policy, whether it's universal life, whole life, survivorship, term that's convertible. You can have that policy appraised, and many times our numbers are coming back 2 or 3 or as high as 7 times that present cash surrender value.
Wow. So Mark, go ahead.
Other instances that I see are divorce, bankruptcy, sale of a business. You own a business, you're the key man. You decide, guess what, I'm going to retire. I don't need the policy. Those policies come through our doors, if you want to say that, quite often. And quite often we're able to go out and get settlement offers on those. Estate tax reform, death of a spouse, those are all circumstances that we see on a daily basis as to why someone might want to look into this market.
Okay, but a couple of the ground rules so far that I'm picking up is, well, I guess one isn't a rule. You can sell any type of life insurance policy, but you pretty much have to be over the age of 65.
Correct.
And you have to have some reasons. I mean, I suppose if you're building a retirement plan and your circumstances change, that might be a very good reason to say, hey, I don't need this policy anymore, but you need to consider carefully what those reasons are, I suppose.
Correct, yeah. We really see 2 or 3 types of clients. One is the client who simply does not need their insurance, have decided for whatever reason that insurance is no longer of value to them and they want to sell it. We also see clients who look at their insurance policy, the sale of it in a life settlement, as a way to fund another alternative investment. Maybe they take the life settlement proceeds, put that into an annuity. Maybe they get qualified for a better life insurance contract, which is a tough arbitrage, but sometimes it happens. And then we also see something I haven't mentioned yet. If you're not 65 or older, which is our market, life settlement, and you're under the age of 65 and you're afflicted with a serious life-threatening illness, this would be termed a viatical, you can sell your policy. Unfortunately, we do see circumstances where an individual is 45 or 50 or 60. They have some very serious illness and they've decided that, listen, they want the money now. They want to enjoy their lifestyle with their kids, with their family, or maybe they need the money for medical issues. those policies can be sold. But again, if you're under the age of 65, you do need to be living with really somewhat of a very serious health issue.
Okay. And so this all sounds, I got to be honest with you, it sounds very confusing, very complex, because you're talking about taking a policy that most people, 99% of people, they have no idea that it's even an asset. And then you actually are kind of a middleman. You go out and you find buyers, multiple buyers, to say, hey, it's worth X amount of dollars to me. And, you know, what I'd really like you to do, if you can, is break down, how does selling a policy actually work? What are the nuances of it?
Very easy, very easy. The good news is it's a very simple process. Not much is required from the client, from the seller. There's a simple application that we send out to our clients. It's about 4 pages. They fill it out. Should take them no more than a couple of minutes to fill it out. And what they're filling out is their name, their address. They're signing off on a HIPAA authorization. And what that allows me to do is go get their past medical records. You do not have to go to the doctor. You do not have to take a medical quiz or medical questionnaire or anything like that like you do with new insurance. No, this is quite the opposite. We're simply looking for your past medical records over the last 5 years. And with that information, we assess a life expectancy report. We also order a life insurance illustration that shows us future premiums. And that's the information that's comprised from my office. We're really all of our clients' back office. They have one job: sign my application, sit back, and in about 4 to 6 weeks, that's about the time period that most life settlement offers will take, 4 to 6 weeks, for me to come back to you with an offer. Now, our industry is somewhat of an appraisal bidding process. There's several buyers out there. You may have seen some on the television. There's a couple of my buyers that do advertisements that would love for you to come to them direct. Now, keep in mind, depending on what state you live in, there may be as high as 16 or 20 different buyers. So that's what our job is to do, is to make sure we take your policy information and take your application, build the case, send it out to every single licensed life settlement buyer. My industry is regulated. It is an institutional industry, so I have to make sure I'm licensed in every state I do business in, and all my buyers, which again, these are institutional buyers. I'll touch on that right now. These are buyers like hedge funds, pension funds. These are large institutions. It's not, and I'll say that again, it's not an individual buying your policy. I think that's a misnomer that some people think, well, hey, am I selling my policy to some guy that hopes that I die tomorrow? Well, no, that's incorrect. You're selling this to an institution that builds portfolios of policies, hundreds, if not thousands. And that portfolio over time is going to pay a return for sure, but you're selling it to an institution. Like I said, there's some very big names out there that are financial, they're hedge funds, there's pension funds that have gotten involved in my market because they realize that they're buying an asset. Again, that asset is life insurance. That piece of paper backed by AXA, Lincoln Financial, MetLife, whatever it is, they're buying that piece of paper. Now, attached to it is an insurance, and is an insured, but for that particular financial institution, it's an investment.
So these are large pensions and other institutions, hedge funds, things that normal people like us just don't have access to, right?
Correct, correct. Again, I may mention there's 2 of my buyers out there that do direct advertisements to clients out there, which is great. I think that's spreading the education on my industry. But those are buyers that I work with, and again, to get the best offer on your policy, the best thing to do is to go through a well-known broker that can go out to all of the potential buyers. Like I said, there may be as high as 16 to 20 different buyers that exist in the marketplace that can potentially put an appraisal and put an offer on your policy.
So, Mark, you bring up a good point. And if I'm sitting at home and I'm watching TV and I see one of these companies advertise, hey, show me your life insurance policy and we'll make you an offer on it, you know, I guess the question comes to mind, well, can't I just go ahead and sell it myself? And what are the upsides and downsides to that?
You can. It's kind of, I'll make the analogy of, if you're going to get a home loan, can you go find one bank to get you a mortgage? Absolutely. You can probably find one. Maybe you can find 2. But a lot of times you go to what? A mortgage broker, because that mortgage broker has access to all of the licensed banks that can put an offer on your particular scenario, on your house, on your loan that you need. Same thing exists in my industry. There are a couple of buyers that do market direct to clients. They'd love if you went direct to them, they could give you just their bid. That bid is probably going to be more towards the buyer's favor than the seller. Me as a broker, my job is I work for the seller. I make sure that every single licensed buyer in your state, wherever that is, gets a fair chance at your policy, and it's my job to negotiate the highest offer on behalf of my client.
So you want them competing against each other. I'm just curious, do they ever get into maybe a bidding war between, does that happen?
That is my industry. You've nailed it right there. It is a bidding war. No one wants to come and give you their best offer out of the gate. Similar to selling your home, you hopefully have a bidding war when you sell a home. You know, you have multiple buyers, and you're going to take what? The highest bid. Same thing exists in my industry, and my job, my role, is to make sure every buyer gives me their highest bid.
Okay. And so I got to be honest, though, too, because once I sell my life policy, I'm a little bit worried, possibly, about what happens after. I kind of feel like there might be somebody driving down my street and, you know, waiting to see if I'm going to kick the bucket tomorrow.
Well, you touch on a point that I think is a valid concern, but is not a concern. Number one, there's never been an instance of wrongdoing in the life settlement industry. And I believe to date, over the last 10 years, we've had one consumer complaint. That's one. Now, in the life insurance industry, annuities, anything else, there's 10 consumer complaints every hour, I believe. But once you sell your policy, really there's nothing more involved. You're still the insured. The buyer, the institution, remember, these are banks. These are financial institutions that are building portfolios. You're no more than a name and a number that get put into a trust, and that trust eventually pays a return. So you're a name and a number within that trust, and once a year that buyer may contact you. It's simply their method of contact to see that you're still alive and to see that you're still at the same number that you listed. But once you sell your policy, you're done. You've cashed your check. You do have a 15-day right of rescission if you get your check after the 4 to 6 week period, and you decide, well, I'm no longer wanting to sell my policy. You return the check and you're done. But once you cash it, you're still the insured, but you make no more premium payments. You're simply the insured on the policy.
So you mentioned that they might call you once per year. Is that the maximum that they can reach out to you?
Yeah, they're allowed to in the contracts. It'll be in the contracts that say that the buyer has the right to contact you once a year. Now, I work with all licensed buyers out there, and I find that most of them never even make that call once a year. They use on other tracking mechanisms to track their investment. Again, it's your life insurance policy. There's several ways they can track that, so you may not ever hear from the buyer again.
Wow. Okay. Yeah, I imagine that phone call might be a little awkward. Hey, John, are you still alive and breathing?
Well, it's really not that menacing. It's simply, hey, John, are you still at so-and-so address and so-and-so number? It's really, I've seen the script, if you want to call it, and it's simply just, hey, are you still at this name, address, and number, and that's it.
Okay. So all of this sounds pretty good so far, but I'm imagining, Mark, that there's got to be some taxes. I mean, Uncle Sam wants their cut of my policy, right?
Absolutely. Uncle Sam, as you said, will want their cut, and I'm not a CPA, I'm not an accountant, but I can give you some very basic information, and we can also provide you with the IRS rulings when and if it comes time to sell your policy. But in general, you will be taxed on the gain. So let me give you a very simple example. If you have let's say you have $1 million policy, and you've paid in $100,000, and let's say your cash surrender is also $100,000. Now, if you go to sell that policy, and I give you $200,000, so you gained an extra $100,000 from your cash surrender. You're also $100,000 over your cost basis. That's where the tax comes in, and Uncle Sam will want to tax you on that extra $100,000, and it is long-term capital gains.
Well, I would rather get taxed and make the extra money, I suppose, than just let it go by the wayside and surrender my policy as it is.
We've had 24,000 transactions, and I've never had a seller say, I don't want to go forward because I have to pay tax. Because they're going to surrender it anyway for $50,000, and I give them $150,000. Yes, you're going to have to pay tax, but I've never had a seller say, well, I don't want to go forward.
Okay. So for the Wealth Masters out there, I guess the important takeaways are your life insurance is a sellable asset in many, many cases. We talked about some of the circumstances where it might be a good fit. Your life changes. For example, maybe you hit retirement age and your kids are all professionals and grown and they don't need the money. Maybe your assets are substantial enough you just don't need it and you want to take that extra cruise with the wife and enjoy it while you're retired. There's a lot of different ways that you can probably use this money during retirement. So, Mark, normally we have some action items for the viewers out there. At the end of the day, with yours, I mean, the only action item that I can think of is, hey, if you think that you might be a good candidate for selling your life policy, you probably need to reach out to somebody like Mark. Is that it?
It is. It's as easy as that. If you're a client and you're sitting there looking at your life insurance, again, whatever type of life insurance it is, and you're kind of deciding, do I need this policy anymore? And you've looked at the other alternatives to keep it in force, and you've come to the conclusion, you know what, I don't know that I am going to keep this policy. We're a phone call away. And it all starts with a phone call. You simply call up. I'm going to ask you a little bit about your age, your general health, and then the policy premiums. And from that phone call, I can usually tell you, hey, you have a really good chance at a life settlement offer. Or I may tell you, hey, you don't. You're too healthy. Your policy premiums are too expensive, whatever it is. But it all starts with a phone call. But if you're in that situation, you have a term policy, it's near as conversion, you have a universal life policy that hasn't performed, or like I said, whatever policy it is, and you're deciding just doesn't fit my needs, a life settlement appraisal might be the best option for you. And we didn't get into the cost. The cost is zero. We take care of all the costs in a life settlement transaction. We present the offer to you. If you like the offer, we're going to go forward. If you don't, you know that your policy is worth that number at that particular date and time.
Okay. Well, Mark, thank you so much for your time today. There was a lot of really good information on what could be considered a complex subject, but I think the biggest thing that people need to take away is it is an asset. I can't even tell you how many people have no clue that your life insurance is an asset, and even me, for years throughout my career, I did not realize this until a few years back. Mark, so tell the viewers out there, how can they reach you directly? Let's just say that somebody out there has got one of these policies and they want to get a quote. How do they reach you?
Absolutely. I'll give you two phone numbers. I'll give you my cell phone, 954-326-9378. That number is 24/7, whether you're on the West Coast or the East Coast, which I'm in sunny Florida. I can always be reached on that cell. And then our office line is 866-326-5433. And again, my name's Mark Mrky, and my email is markm@lisettlements.com. Simple as that.
Great. Mark, thank you so much for your time today. I really appreciate it. For the Wealth Masters out there, either you control your money or it will control you. I prefer you're the former, not the latter. Thank you very much for joining us and learning about life settlements. And this is Greg Phelps signing off.
Thank you.